Good evening. We're about to begin this study session for Sumner County Board of Education this evening. Before we do, I'm going to stand for a moment of silence, followed by the Pledge of Allegiance to our flag. Anyone who'd like to join me, please feel free to do so. Please join me in the pledge. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. All right. Good evening, everyone. First item on the agenda is a finance presentation. Dr. Langford, I'll give the floor to you.
Thank you, Mr. Brewer. As we looked at, and I'll give you an update a little later on where we are in stadium, but at the last meeting we talked about an update and we had some questions about reserve funds. Obviously, if we're going to do a significant amount of construction, renovation, whatever we're going to do, end up doing with stadiums, we're going to have to dip into our reserves. So I asked Ms. Brown and her team to kind of spell out exactly where we are with our reserves, and then also to give kind of an overview of her department and the different things that they do, because it's one of those things I don't know that anybody appreciates the volume of what they deal with, the magnitude of what they manage, and the great way that they do it. They really do it exceptionally well. And so I think it'll help all of us as we move through. Obviously we're going to start budgeting earlier this year than we have in the past, and we've got a lot of big things, whether it's compensation or capital or other things like that. So it's going to be helpful to know exactly what money we have, where it is, and how it's available. So I'm going to turn it over to Ms. Brown.
Ms. Brown, before we start, was you going to mention that ask them to hold on questions until the end of it?
Thank you, Mr. Brewer. There's a lot of information in this slide presentation. A lot of questions will be answered as we go on, but since we've got a hard stop at 9 o'clock, we'd appreciate it if you can let her get to the end. So just write down any questions you might have. Let her get to the end, because I'm afraid there's going to be a lot of stuff that's going to pop up that you may have questions about. We may not get to the latter slides where we talk about reserves. So if we can just hold questions till the end, if you don't mind, that would be great.
Yeah. Hello. So I think most of you obviously know me, but I'm just going to do a little introduction. I've been at the school board a little over 11 years now, and I am a certified public accountant. I'm also a chartered global management accountant and a certified county financial officer, which is a newer designation that their comptroller has come up with in the last couple years to help better train government type employees. And so I've before that I was at Dollar General Corporate. I did a little stint in public accounting, but I was at Dollar General Corporate headquarters for about 5 years, TVA about 3 years. So I've had a little bit of a range of stuff, but been here 11. So I'm going to let Trevor introduce himself.
Hello, my name is Trevor Glover. I joined the school board central office in February. Prior to that, I spent 5 years at the comptroller's office auditing county governments. I'm also a certified public accountant and certified government finance manager, certified county finance officer.
All right. So we're going to start a little light. So just kind of want to show everyone what is encompassing in the finance department, and talk a little bit about our mission. Obviously, finance is a support role for our schools, right? So what we want to do is we want to make our schools work better, because we are a support organization for our schools. Under the finance umbrella, we have financial accounting and reporting. We have payroll. I just put a little bit of information out there for you. Our typical monthly payroll, we pay over 4,500 employees a month. Last year we issued over 5,000 W-2s, so that kind of tells you W-2s, anybody that's been employed with us. So a lot of people have come and gone through the year. That kind of gives you an overall of the type of number of employees we deal with in a year. Accounts payable, we issued 5,722 checks, and that doesn't include a lot of other functions they do with P cards and some other processes. Purchasing, They issued 2,180 POs last year. That doesn't include all the other bids and capital and all the other stuff that Chris Harrison and his department work with. Budgeting, I think this is a pretty cool number. So if I add up the total final revised budget for last year, it was a $416 million. And so, you know, we start with the general purpose budget and all the budgets we do, but sometimes we don't kind of look at those as a whole, as a board, and especially with the revisions, because we get a lot of grants and a lot of federal throughout the year. So I wanted to kind of put that number out there. Retirement, we had like 128 retirees come through last year. We also do the benefits and insurance trust. I oversee internal audit, and I didn't put enough about them on here, but you know, they do audit all our internal school funds with addition to our outside accountant. And then I also have print shop, so if you need something printed. So the next slide is just, I kind of wanted to present, this is the total spent in FY23. So FY23 is the year we just ended on June 30th. So we're not on a calendar year, we're on a fiscal year. It starts July 1st and ends June 30th. So this is what we actually spent last year. It's a little different than what we budgeted, but what we actually spent per federal grant, federal fund. And so that, if you count those up, that's 28 separate federal funds that we managed last year, which totaled over $27 million. In the next slide, you'll see these are some of our state grants, and we had a total of 9 different state grants, and which totaled over $5 million. So in totality, we managed over $32 million of federal grants and state grants. Just a little information. So every grant that we manage has a different stipulation and rules and guidance from the state, guidance from the federal government about what is allowable, what is not. And so those individual grants are they have people like in Frankie's department and Katie's department and Norma's department that kind of oversee a lot of the day-to-day functions of those grants, and then on the back end we're accounting for all of those. And so it's a lot, and so I just kind of wanted to kind of put that out there and so everybody could see that. So this next one, so let's talk about what makes up kind of all these grants, all these federal funds and balances that we're talking about. So all of those summaries, so we account for everything at a transactional level called like a GL account. And so every transaction we do is coded to a specific GL account, general ledger account. So I just kind of wanted to give a little overview so you kind of could get a perspective of what that looks like for the district. So we currently have 19,187 active GL accounts. We have 32 separate subfunds. We have 32 expenditure major categories, which you're used to kind of seeing in your think about each page of your budget book. That's kind of what a major category is. We have 62 different locations, and so we don't just track school locations. We also have locations like maintenance, and within maintenance operations within the maintenance building, finance within the central office, so multiple locations that we track. We also have departments, and so think about that as finance and federal instruction, so a lot of different department codes to kind of help us better manage those. Also entity codes, which is really boring. It's kind of just a code on some of our revenue that we use to consolidate stuff for the comptroller. Most of the time your expenditure accounts, you'll see 2 zeros. Object codes, we have 137 individual expense object codes. So that's the object code. When you're thinking about your budget, it's like the 116. It's telling you what it is. It's salaries, it's supplies. So, and we have 79 different revenue codes, different types of revenue, 71 balance sheet object codes, different types of balances on our balance sheet. And currently, not all of them are being used actively, but we currently have 147 project codes, but those change daily, weekly. Some of them are used one time, and some of those are used over and over again. So I'm going to kind of go over an example accounting string because it's so exciting. I can tell everybody's just really, really wanting to know. So our accounting string, if you'll look at your presentation, kind of made up of several different segments. So the examples of our funds are the 141 fund and or federal fund 142. So when you look at that fund code, you can tell, is that general purpose or is that federal? So that kind of helps you distinguish those two. Then the next segment is subfund. So that kind of tells you what are we looking at within that. So you'll see school nutrition, Duke, Brown Trust all have different subfunds, but still under the 141 fund. Within our federal fund, you remember that what was it, 28 different federal funds? All of those have a separate subfund. And those subfunds allow us to also, for anything with a subfund like that, we have separate balancing. We have separate balance sheets and year-to-date budget reports for those specific funds. They're a self-balancing book. The major category, kind of like we talked about, that's kind of each page of what you think about on your budget. 71-100, 71-200, instruction, special ed. And then departments, really those are just internal. We use those to help our workflows within our accounting software, and also to kind of just know where management lies with certain items. The location code, we kind of talked about that. I wish I'd have put some better examples, but that tells you right there that is at the central office. Entity, we're going to ignore. And then that next object code is going to tell you that that's other salary and wages. And this is for our projects LEAP. Now, actually, this account code's made up. It doesn't actually exist. I don't know why I didn't use an actual existence. And that's another just something to know, that every account can't have every account code can't have a certain combination, if that makes sense. So like GP, you couldn't have a 141-933. And so there's certain things that can and can't go together. So the next slide is just kind of wanted to talk about the comptroller's county chart of accounts, because we've talked about having a what's the right word? Yeah, thank you. A uniform chart of accounts. So the comptroller says, hey, we want uniformity across the state. We want to be able to pull something from our school district, from this county, from this school district over here, and know how to read it. And so these account strings are consistent based on what the comptroller tells us. So I kind of highlighted in red so you would kind of know what is required. They require the fund. They require that major category. You'll find those within the chart of accounts. And within our object code, you kind of have to segment it apart, but there's a 5 on the front of that. But the kind of the 3 digits in the middle is kind of that object code that you'll find in the state chart of accounts. Subfunds and locations and departments and projects, those are not, you're not going to find those. I mean, they don't have my location in the uniform chart of accounts, right? So that's something that we track, but it's very valuable because of all the reporting that we have to do to the state, to the federal government. We have to track by location. The state requires us a lot of times to track certain project codes, and all of those grants that you saw that are in the general purpose, we assign a project code so we can ensure that we're tracking those appropriately. So, and I'm going to turn it over to Trevor.
All right, so I'm going to talk about some of the audits and the monitoring that the Sumner County School District is subject to. First is the Tennessee Comptroller's Office. The Comptroller's Office has the authority to audit and investigate all government dollars in Tennessee, and they kind of do that in 3 different ways. So we deal with the Division of Local Government Audit, and first audit that we're kind of subject to is district funds. It is an annual comptroller staffed audit of the district level funds, and typically they do work on that all throughout the year, but they report each February on the prior fiscal year. Another audit we're subject to is the Information Systems Audit. It's the annual comptroller staffed information systems audit of the financial software and the internal controls conducted during the year, and those results kind of funnel up to the one report in February as well. The last one that they conduct is the Federal Single Audit. It's also staffed by the Comptroller's Office, and they audit the federal grants. So what's occurring here is we receive a lot of federal grants from different federal agencies. They don't have individual audit firms that go out and audit how we use those funds. They delegate that authority and kind of sub it out to the comptroller's office, and so they're responsible for that. Another division that the comptroller has is the Division of Investigations, and they investigate any fraud, waste, or abuse that's found in county government. Another layer of audits we go through is with Matlock and Clements. Matlock and Clements audits our internal school funds, which we've already talked about. Those are those individual school funds where you have sports receipts and disbursements, fine arts receipts and disbursements, club receipts and disbursements. So Matlock and Clements handles that for us. They conduct a three-way contract with us and the comptroller's office to audit those funds, and we also have internal audit, as we already mentioned here, to assist in that, and they do a great job assisting our bookkeepers and navigating different laws and regulations that is out there. The other thing that Matlock Clements helps us with is they do an ESSER expenditure review. We have a grant-funded contract with them to review ESSER expenditures to determine compliance with the grant requirements. So when the U.S. Department of Education, grants out that money, they have compliance requirements that we have to follow when spending that. So let me get to the next slide. So we've included in here the most recent audit, or not audit report, but agreed upon procedures report with Matlock and Clements for ESSER 3. And so what they do is they look at all of our expenditures in ESSER 3 and what we spent the money on, and they look at the compliance requirement from the U.S. Department of Education, and they determine if those expenditures are allowable or unallowable. And if you notice there on the right, there was no compliance deficiencies noted. Same thing here. This is actually ESSER 2, so it's still ESSER, but just the prior version of ESSER 3. And so we just wanted to show there as well that there wasn't any compliance deficiencies that Matlock Clements noted in their review of ESSER 2. Another layer of monitoring we're subject to is through the Tennessee Department of Education. So most of our grants are passed through that we receive are passed through the Tennessee Department of Education, and they continually monitor our state and federal funds. For example, they review and approve all federal and most state grant applications, and also they require monthly reporting for reimbursement. So most of the grants we receive from them are on a reimbursement basis. So that means we have to spend the money, and they determine that if that was an allowable or an unallowable expense, and then they reimburse us as such. Some more reporting we have to do with them are final expenditure reports, and pretty much what that is we have to tell the grant givers what we spent their grant money on is kind of the purpose of doing a final expenditure report with TDOE. And so as a former preparer of these beautiful annual financial reports, they're 261 pages, or Sumner County's 2022 one was 261 pages. And so they're very, very overwhelming really to look at and try to read, but we pulled out a few financial statements that we feel are important and be able to equip you in the future making decisions. So the first page we pulled out is page 6, and that's a summary of audit findings. If there were any non-compliance with grant requirements or state law or any improper accounting or treatment, those findings would be listed here. There were no school-related findings in FY22, and I went back the last 8 years, and I didn't note any finance director of schools related findings. So the next financial statement we have here is the schedule of revenues, expenditures, and changes in fund balance. And so if you've ever seen any of our internal financial reports, this compares to our year-to-date budget reports. I don't want to spend too much in the weeds on this, but one thing I do want to bring out, and I highlighted over there on the 3 right columns, you have the original budget, which was the original budget approved at the workshop. And then the final budget is it's that plus all the budget amendments that were approved throughout the year by the County Commission and School Board to get that final budget amendment number. And then that last column is a variance with the final budget, so it's very helpful in determining overspends and underspends. This is just page 2 of that report. And all these statements are available online in the Comptroller's office with this report. I did highlight the page number at the bottom, so if you want to go back later and look at it. This is a balance sheet that was located in the audit report for all the school funds, and so once again, I'm not going to get too much in the weeds on this, but I do want to bring out the 3 fund types, the 3 columns that are highlighted. The first column is general purpose school, and so in this financial statement presentation, general purpose school includes central cafeteria, Brown, Duke, and your traditional general purpose school fund. The second fund type is internal school, as we've already talked about. Internal school funds are those funds held by the schools. Accounting pronouncements ruled in FY21 that their financial results should be posted with our results. So 2 years ago, we added the internal school funds financial results, and all that happens there is the comptroller staff takes the report from Matlock and Clements, sums up all those numbers, and puts the numbers in their financials. The last fund is the School Federal Projects Fund, which we've already talked about. That is all the federal grants. We have to account for those separately in a separate fund. So this is page 2 of the balance sheet. Kind of what I wanted to bring out here is fund balance classification and the difference is in fund balance. I tried to highlight them like a stop sign, but just going through here, non-spendable fund balance is cash has already been out the door. We've already spent money on items, but we can't recognize that expense until a future period for whatever reason. The next fund balance type is restricted fund balance. That is fund balance that is money earmarked by an external body. So it would be a grant giver or a specific law that restricts that fund. The next type of fund balance is committed. Committed fund balance is money earmarked by the legislative body, which in this case is the county commission or the school board. The next level of fund balance is assigned, and that is money earmarked by management. And so what that is in this instance are encumbrances. So it's purchase orders that we've issued to companies, but we've not received an invoice or received the goods or services yet, so we have to reflect that assignment. Okay. Some other financial statements that we felt important to list, but not important enough to bring out onto individual slides. And so just reading through them, the statement of net position, combined statement of revenues and expenditures, the federal projects fund schedule revenues and expenditures, audited schedule of detailed revenues. And so if you want a line-by-line revenue on what the school received in FY22, an audited statement, you can reference that. Schedule of detailed expenditures, if you want an audited line-by-line expenditures for all funds, that's very detailed, that's listed in there as well. And then the last one is the schedules of expenditures of federal awards and state grants. Okay, and we just wanted to also bring to the attention as we publish our monthly financials after we have a review process, usually about a month after the month closes, and we've listed here where you can find them on board docs.
So next we're going to go through our FY22. So that's the last audit we had in that fund balance calculation. So a lot of questions have been obviously around our fund balance. I think Mr. King even maybe mentioned $20 million last year, or last meeting. I kind of want to explain all the components of that and why sometimes when a question's asked, it's not as easy as just giving a direct answer, because there's a lot of different pieces that go into that. So if you start at the top, that $119 million fund balance you'll find on the comptroller's audited financials. But within that balance, you're going to find, kind of like he talked about, the inventory within our school buildings. Prepaid items we've already paid for, haven't received for. that internal restricted account of $6 million. So like he said, that's a newer something that they're putting on our financials. Our reserve balance in our previous audited financials really don't reflect that. I think that was the prior year was the first year of that. Is that right? Also, you're going to see the federal projects restrictions, the GP restricted, which is like child care, preschool, other grant donations, and balances. We talk about those every year. You know, that's restricted because of the allowability of what we can spend those funds on. After we close our books every year, we take those restricted balances and we amend those back in to our budget. So our daycares or preschools, if it's a specific grant, those can be spent on the funds allowable. Also, you're going to see school nutrition restricted account. And so a lot of times what you'll see when you look at our just general purpose balance sheets, you're not ever going to see that amount on there, because to show that you'd have to take two different balance sheets of ours and add those together. So this is a consolidation of a lot of different reports and different balance sheets that we use as management. You've got the hybrid retirement fund. Then we've got the GP committed for education. And so this was the difference between what we balanced our budget with that year, difference between revenues and our expenditures. So when your expenditures exceed your revenue, you're going to use your savings to pay for that. So that's that reserve balance. And that's restricted because we have, as a board, when we vote on that, when you all vote on that, you're saying, hey, we're restricting this money to make that whole, make this budget whole. We know that our revenue is less than our expenditures. This is restricted to pay those debts. So the committed for education, that FY22 was $15 million. And that was, you all voted on that as part of the budget process to kind of set that aside and have that committed for financial stability and potentially other projects. Then we have the federal project. This is funds that for cash flow purposes, because as he mentioned, we are reimbursement based and we can't go negative cash. It's an audit finding, and the trustee doesn't like that. And so we as a board have kind of placed that $1 million in a fund to help the cash flow of our federal projects. That's a resolution you all have passed previously, and the county commission actually has to pass that. Then the other one, the Sign for Education, as Trevor mentioned, those are our encumbrances at the end of the year. So we have that's a PO that we've issued, but yet haven't yet received that invoice. And so those funds at the end of the year will close out and they be rebudgeted next year, so we can pay for that when we get that bill. So that leaves the unassigned balance from those financials of $36 million. And of that $36 million for that financial year, 8.9 was restricted for that 3% fund balance rule. So that would leave the available budget at the available fund balance at the end of the year as $27 million. So this next slide is just, I wanted to, and this isn't yet on our website, but our final 23 are. This is the balance that we started as a school year, our balance sheet as of July 1 of this fiscal year. So a balance sheet you have to think of as a snapshot in time. And so this was our cash balance, our reserve, all of those items, what we owed, what we were owed at July 1st, 2023. So the start of our new fiscal year. So I just kind of wanted to show you that. And remember, this is only GP. This balance sheet does not include school nutrition, Duke, Brown, some of the stuff that you'll see on the comptroller's financials. So kind of let's discuss just a little bit fund balance. And so it's the county government actually has a policy of requiring a certain amount of fund balance. And so I've just pulled a snippet from their actual policy, but you'll notice it's very specific, and it's basically 2 months of operating costs. There's a certain percentage that equals. So what does that mean to us? So if you'll kind of look at the middle section, I'm sorry, I kind of feel like I wish I'd have reordered those, where you see the FY operating expenditures, so that 338 million. So if you do the math on that, 2 months of operating, or the 16.67%, is a $56 million fund balance that's recommended. That's what the county government recommends and follows themselves, that two months. So if you look above, there's a lot of arrows and stuff. I'm going to go on to the next slide because I repeat this on the next slide. So what I've done here is I've taken what you're seeing, this little snippet of the balance sheet, is the exact same balance sheet that I showed you in full. I'm just kind of narrowing in on the reserve, the fund balance at the bottom, and kind of crosswalking everyone to kind of show what each of those pieces are. And so if you kind of come down, you see that total fund balance. There's a kind of a little peaches line going down, so that $104 million. So you can kind of come on down, and you see that's their total fund balance there. And then each of these are just the individual pieces of the fund balance. So and we tried to actually this year break those out a little more specific on our actual balance sheet too, but here's our explanations for those. And so just like we talked about the GP restricted, that's daycares, preschools, grants that we've already received the cash for, the funds for. We have that 3% required fund balance. Career ladder, we have to restrict that. Hybrid retirement, the $27 million committed by the school board in the when we passed our last budget, and then the $29 million that we committed to cover the difference between our revenue and our expenditures. So I kind of want to jump across to the other left side of the page, and so I kind of want to just kind of let you know where these numbers are coming from. So the government, the county government recommends that 2%. So what of our fund balance could be considered to cover that 2%, right? So, because it's a little different. We think, oh, we can't spend that 3%. We can't spend that 3%, but that is considered a fund balance that will cover those 2 months of operating. And so, just kind of bringing that over there, the 3% required, that 27 committed, that is committed by the board, but that you do have discretion on spending that. That's not committed or restricted in the other ways. The board has the ability to vote to spend that if they deem necessary. And then you're going to see our regular unassigned, but right off that balance sheet, kind of to the bottom and over. So that's our regular unassigned budget reserve balance, and that's our total available of $67 million. So if you kind of come on down, so we've got $67 million available. If you consider that good accounting practice, good recommendations, county government recommends, and their policy actually requires that 2 months of operating. If you take that $67 million that we have available and subtract out what the 2 months of operating that the county government suggests and is good business practice, that would leave us available right now to budget $11.5 million of unassigned fund balance. But that's with knowing that 2% is a recommendation. It's not a requirement. It's that recommendation. So the next slide, I just kind of wanted to give just a little more information about that 2%. I keep saying 2%. I'm so sorry. 2 months of operating expenditures. I think I keep saying 2%. 2 months of operating expenditures, 16.67%. So the next slide you'll see here, that's just a bond issuance report. And I just kind of wanted to show you this. This is for the county government, but I wanted to show you how reserve balances are really important for fiscal management, and how other entities, bond issuance, they look at that reserve balance to see what their bond issuance rating is going to be. The county government does a great job with that, and so you'll see that they're like AA+ rated, and some of the reasons they are, and you can get the whole report if you'd want, but we'll note kind of at the bottom, it's highlighted. It's very strong budget flexibility. In fiscal 2020, they had 40% of operating expenditures. So their policy requires 16.67%, but they had over 40% operating expenditures. So that the bond issuance company said, hey, that is a really good thing for us. And so we feel like you're very stable. So that helped our bond rating, the county's bond rating. And so the very next page, just kind of a little more detail on that same thing. So my highlights don't come over as stuff as well. So in fiscal 2020, that 40% operating expenditures that we just talked about. But look, over the last 4 years prior to that, they exceeded 30% over the last 4 years. And so because they have, the county government has such a strong a reserve balance, the bond issuance company sees that as a really good thing, and that allows us to have a better bond rating. And so I just kind of wanted to bring that up, just a little bit about, you know, why it's good to have a strong reserve balance. And I think that's all we have. So I know that was riveting. So.
Mr. Lancaster. Well, I had Dr. Langford first.
No, I just queued up.
You just queued up. Okay. Mr. Lancaster.
So one question I guess I have, what are we, when we have this, all these reserves and fund balance or whatever, what are our restrictions on how we can, quote unquote, I mean, are we allowed to earn interest on it? In other words, are we allowed to put it in a savings or CD or something like that?
So the trustee, that is her function. She has all of our money, and she invests that. And we do receive some interest income from that, but that's all handled and managed by the trustee's office.
Okay.
That's nothing my office does.
So Mr. Lancaster, I ran into Mr. Shoke, and we had this conversation a few weeks ago. And I know I talked to the trustee a couple months, probably 4 or 5 months ago, and she indicated that in the past 5 or 6 years, we've never even really looked at it because interest rates were so low that there wasn't even worth looking at. But I believe she was looking to see if we could move portions of the county and school system reserves in to draw, you know, because I mean, for instance, CDs and some other things now, bonds, things like that,
Yeah,
would yield a lot better interest rates now.
Yeah, you can get, you know, 5-6%
5-6%.
on some stuff, and like I say, if you got $60 million, 6%, you know, we could.
Couple
In
million
my
dollars.
head, we could fund our iPads,
Mm-hmm.
you know, just off the
I'll,
interest income off that. Yeah.
I'll presume that Mr. Show followed up with the trustee, but I'll follow up with the trustee too and ask if that's something that we can look into doing.
Okay, please, because you know the best money is free money. So
That's right. Yeah.
Thank you, Mr. Lancaster. Mr. Gregory?
One comment. That department does an amazing job.
Thank you, Mr. Gregory. Mr. King?
Yeah, just clarification on that last bit you were talking about with the bond issue. And were you saying that the more we have in our fund balance, the more we can borrow, or the more the county can borrow?
I think it's more that it's not, I mean, that does have a function of it, but it's more the interest rates you're going to get, because that's part of how they set your bond rating, and the higher your bond rating. So for instance, a lot of the money that the county borrowed in the last 5 or 6 years was under 2% interest. So that was because of that bond rating. We have as a county, we have the second highest bond rating you can have if you deplete your reserves too much. And then there's other factors that they look at as well. But if you deplete your reserve funds, then that's one of the things that brings down your bond rating if you're borrowing money.
Okay, and then I have another question. I mean, I've got a bunch. I just don't know how I'm going to keep track of all of them. But on page 156 of the comptroller report, there's an item called Equity and Pooled Cash and Investments. Can you all explain that line item? What is that?
Yeah, so that's the money that's held in the trustee's office. In county government, the trustee has the only authority to invest funds on behalf of the county, behalf of the school district. And so think of it as the trustee acts as the bank for the county, for the school system. We don't have any bank accounts. We don't hold any cash. all of that is held in the trustee's office.
Okay. And is that in some kind of investment instruments or like CDs, or how's that being held?
So the trustee has the authority to invest all county funds. I'm not for sure how she has them invested, but she's an elected official and she has the authority to invest that as she sees fit. There's multiple state laws that tell her, not really tell her, but direct her on how to invest those funds. There's a local government investment pool that a lot of the counties and trustees use to invest idle funds.
Okay.
Mr. King, I think that was what we were just talking about too, is that I don't think it's been something that's been on anybody's radar because interest rates were negligible, but I think it is now that you can get possibly 4 or 5%.
Thank you, Mr. King. Any other questions? All right. Seeing none.
I guess I have another question. So,
I got
oh,
Ms.
okay.
Andrews first.
I didn't know.
Would it be possible for us to get this presentation printed in a printed form? I know it'll be online, but I'll sometimes like to refer back and have it tangibly. So if I could have a
Yeah,
printed copy, that would be great.
It's in board docs already. Jerry
Right.
posted it, but then we'll get a printed copy too.
Thank you.
Thank you, Ms. Andrews. Mr. King.
Yeah, so I'm looking at, this is the comptroller's report, I guess page 154 through 160, whatever. It's all the school stuff. And I know 159 is our operational budget, 159 and 160, I believe. And then prior to that is our, like what you all showed on the presentation, was our fund balances. And so, but on page 160, and this is the question I asked at our last meeting. Page 160, it says net change in fund balances, and that amount is 31.4 million. So my question is that is revenues minus expenditures, and that's what's left over. Am I correct?
So I would say that's correct, but keep in mind that that includes all funds across the district. So that includes those internal school funds, school nutrition, federal projects funds, not necessarily funds that are local general purpose school funds.
Okay. But that's unspent money that we haven't spent. That's 31.4 million that was not spent that fiscal year. Is that correct?
I don't have the report in front of me, but I would say so. Across all funds, that would be the increase in fund balance, revenues over expenditures.
Okay. So the previous fiscal year, it was 23.4 million. That was the other part of my question in our last meeting. And so that is accumulating. So that year, revenues minus expenditures was 23.4 million, end of fiscal year 21. And that increased our fund balance to 80 million. This past year, fiscal year 22, we had this 31 million. That increased our fund balance to 119 million. So, and part of my question was, that just seems like I know it's, what was 2 months of our operating budget?
56 million.
Okay. Which it looks like we're accounting for that in these budgets. And so that is money that just seems like an excessive amount that we're not using. And so how can we better, allocate that money and find a place for it? That was my question. That was because it just seems like we keep growing this fund balance.
It's a great question. And so when you look at kind of accounting and budgeting guidance, you want to be within 10%. So if you're projecting a budget, you want to spend with an approximately within 10% of what you budgeted. Mm-hmm. And that's just kind of a rule of thumb, good practice. And so when we talk about that, and it kind of can slice and dice the numbers a lot of different ways to look at it. And I want to just make sure too, when you look at just like our year-to-date budget report, which is different than the comptroller's report, you're going to see, original budget, revised budget, and then expenditures. And I want to note that within grants, for example, just because we have a revised budget doesn't mean we actually spend that. And a lot of those will be carried over or reallocated the next year by the state. So sometimes when you look at our year-to-date budget report as a whole, it's a little deceiving because it looks kind of like we didn't spend as much money as we could have, but a lot of those are grants. And so when I kind of slice and dice all that apart, I'm going to have to get my reading glasses on, I apologize. So we kind of look at that. If you kind of take those grants away, it's about $32 million. And so when you look at that, kind of what different components of those, it's and then we look. I go in and look at the individual expenditure accounts. For example, one of our largest expenditures that we saved on was our teachers, but it's also our largest line. So if you look at it, it's $4 million, but it's 4.9%. So we're well within less than that 10%. Another example, though, would be like custodians. That's our next largest line that we saved money on. It's $1.3 million, but we left 22%. We didn't spend 22% of that budget. But the problem is we're having a staffing shortage with our custodians. We would love to be able to fully staff our schools, but we also don't want to strip that budget away because we're just going to, we're never going to staff our schools. Let's just take that money away. We still have to budget expecting that we're going to fully fund our teachers, fully fund our custodians, and all of our other positions. Special ed's a great example. We had $1.13 million savings in SPED in 23. But we had a lot of SPED vacancies. So I would never want to strip that out, and then we can actually hire that teacher, and I go, I'm sorry, I took that out of the budget because you didn't spend it last year. So you've got to be really careful taking money out of the budget just because you didn't spend it, because if in those scenarios when you're fully funded, you want to spend that money. And the same thing with, that's kind of salaries, because that's our biggest line items. So when you add up all 200 and some odd lines of salaries, you're going to see a significant savings, but they're made up of, $4 million there, $1 million here, $1 million there, and then a lot of other pieces. And we can go through that later if you would like. Anytime you would like to come and sit down with me and Dr. Langford, we would love to kind of go through any of those specific questions you have. But in addition to that, there's, savings in capital. So we allocate capital every year, and we don't always spend that. It's based on need, and but we need to have that flexibility as a board, just like this year, that we have capital available that we can use to repair bleachers and do some of the stuff we're doing this year. And so if you go through, kind of strip out those grants, because they kind of skew it a little bit, you can kind of see line by line. And for the most part, we're as a whole, we're under that 10%. And then for the individual lines that are over, there's usually a very good explanation, or it was a decision. Hey, maybe we didn't, like legal, for example. Hey, I was really glad we weren't sued and we saved several $100,000. But we have spent that before. There's, just textbooks last year we saved money. Diesel fuel, we saved $420,000 in 2023. And that was great. But diesel prices are very volatile. We've had to amend money into our diesel lines before because we didn't budget enough. This year, I missed water. Our water was way over budget. Even myself and Jamie from operations, we sat down and we tried to parse apart what we thought our electricity was running high, our water was running high, and we still missed it. We still were over budget by $20,000, and I don't like that. I don't like to miss that much. And so those are all the little components that make that up. But if you would like to come, we would sit down and kind of go through those line by line for you. It's just unusual the comptroller's report and our financials that you're used to seeing are just not apples to apples. These are combined, and they make some high level adjustments here. And so it's hard sometimes to crosswalk those across. And I don't want you to think because they look different that there's anything weird. It's just the way they consolidate and versus the way we report to you and the way we manage. We manage general purpose, very specific. I don't want that combined with school nutrition. You know why? Because that funding isn't allowable to be spent in the general purpose. So we have all of those balances separate and apart, and we look at those balances separate apart. So when somebody says, "Oh, you got a $120 million fund balance," I'm like, "What?" Because that's not what I think about as our fund balance. Those are, internal school funds and all of these other restrictions. That's not how I look at the fund balance when we're making management decisions. So I just kind of wanted to explain a little bit of that.
Yeah, and I think it's important to look at that. As Amanda mentioned, our largest ones, it's unstaffed positions. And so I think that hopefully, one of our big goals that we're going to look at in January is a compensation plan to significantly move what we're going to do. So I'm hopeful as we move those salaries up that we'll start to fill those positions. And then that 22% for custodians, I'd love for that to be about 5% because that'll mean that we're staffing those jobs. I think also, the other part is we are going to dip into the reserves, and it's the reason why we hope that we saved and been good stewards of what we've had, because it's going to allow us to do what I think are two of the major lifts that we're going to have over the next couple of years. One is capital, like we've been talking about stadiums, but in years past we haven't spent all the capital money that we've allocated, and it's rolled back in. We had $22 million this year, Amanda, that we think roughly for capital that we. Yes. So we're going to spend almost every penny of that, and that's not going to be that's beside what we're doing on stadiums. This is on HVAC units. Portland High School needs a new roof. You're going to start to see some of those projects. Some of those are out for sealed bid right now. We'll be bringing those to you because we've got a lot of capital projects to get caught up on, and some of it is automating HVAC stuff. It's not really exciting, but it's stuff that really help out as we're losing experience in our HVAC team and trying to catch up there. Automation helps tremendously. And the other thing obviously is compensation. Robertson County's already gone to 50,000. If you look, Robertson County has made they just redid their tax rate, and they've made some major moves. I saw today a sheriff's deputy in Sumner County starts at 51,000. A sheriff's deputy in Robertson County now starts at 63,000. So they've made some pretty significant moves. They've gone ahead and I believe they've already taken first-year teacher pay to 50,000. Metro's right at 50,000. So we're going to have to go above 50,000 for teacher pay to be competitive for suburban Nashville area. We're also obviously, that doesn't even touch what we're going to, some of the things that we're seeing on the classified side is especially, a lot of Andy's team, a lot of Andrew's team. Across the board, we're going to have to we've got a serious lift ahead to do there. And so we have to be careful as we look at stadiums and things like that, how we allocate those reserve funds as we dip into that, because we're going to catch a lot. We got a windfall with the extra $31 million from TISA last year, but TISA is very uncertain right now. For instance, there are forms that we're going to have to fill out and submit to the state on November 1st that won't be approved by the State Board of Education until the middle of November. So there's going to be there's going to be some fluctuation as we figure out. The state's rolling out a new system. Everything about TISA is coding individual students. Norma's team's done a great job of leading that rollout, but there's going to be some variation there that we're going to have to work through and think through in terms of how do we project where we're going to come in on TISA. Is the legislature going to put in any more money? Because the money that was put into TISA was to get us to 45,000, which we're at. The money has not been put into TISA yet to help us from the state to help get to their share of the 50,000. So hopefully that will happen this year. But some of that, if it doesn't, we're still going to have to go there. But we're going to have to figure out how we're going to do that locally. So I think the two big lifts as we're thinking about our reserve funds is the capital part and the compensation part. We'll also have principals should have already submitted their strategic planning forms, and we'll start meeting with them individually in about a week and a half. And so we'll be able to get you some detailed things about what We'll probably try to compile that report by school or something, just to give something you can look at and see what principals are looking at for capital projects in addition to, I'll do a stadium update in a few minutes. Sorry, Mr. King, that was a very long answer from Amanda and me to a relatively short question.
I appreciate that.
Yeah, I'd just like to add just a couple of other little things too, like,
Kind of go back what we were discussing a minute ago. You know, we have 2,632 certified positions. So if you just $1,000 per position, that's over $2 million. And so at any given point in time, we have people on leave, we have people getting new degrees, and people leaving that make more money, and people come in that make less, and vice versa. And so there's a lot of fluctuation with a budget of our size. It can't be to the penny, because it can't be, because we would be non-functional. We wouldn't be able to operate. And so I just kind of wanted to, put in perspective what that looks like. And, classified positions too, we have over 2,000 classified positions. That doesn't include subs. That doesn't include, what Unity and other these, academic athletic supplements and some of those components too. So there's a lot of pieces to compensation, not just a salary by person. So just to kind of give a little bit more explanation on that.
Okay, so just to follow up. So that 31 million this past year, 23 million the year before that, some of that is restricted, but some of it's not, correct? Yeah. And so my question, 119.4 million, that's better than 53 million, right? That's what our fund balance was in 2019. So, now we're at 119 million. 2019, the fund balance was 53 million, as reported by the comptroller. So we're much better off now, right? And that puts us in a much better position. So is that correct?
Yes.
Yeah.
there's some funds included, there's also some funds included that weren't.
Prior, but not material. Yeah, the internal school funds are now included. They weren't before. That's not material, 6 million.
Yeah. So, right. That's all I'm saying. It's like we have, it appears to be, we're in a great position. We're well funded with this. So I'm curious, maybe give me a ballpark figure here. Of that 119.4 million, how much of it is unrestricted? Like how much of it can we, if we wanted to spend all of it tonight, how much would we,
Can we jump back?
what are we
to
talking about?
I think it's on the slide. If we can
Well-
jump back to.
Yeah, it was kind of broken down into
It
different
is.
things,
So
but
the number,
So basically, it'd be about 67 million.
well,
Okay.
it's, sorry, it's less.
Well,
It's,
67 million total.
and
right,
10 million
so-
is restricted.
So the rest of that 119 is restricted.
Okay.
So if we followed what the county suggestion is, what the comptroller's recommendation is 2 months of operating expenses, that's about 56 million. So if we were going to stick to the recommendation from the county and the comptroller's office, we would keep about 56 million restricted. We have 67 that we could access, so it'd be about 11 and a half, a little bit over 11 and a half million.
When I'm looking at this, I'm looking at the fund balance from the comptroller, but then we also have our operating budget, which we voted on, and that included that mandatory amount, which is not in this 119 million. So,
Yeah, it is.
it is. Okay. Okay, I just wanted to make sure.
Yeah, that is.
Okay.
10 million, 556.
38.
Okay. So I was noticing on the slides that total fund balance, general purpose committed was 29.9 million, and then board committed was 27 million. And I'm just going back to May, if you don't mind. I was looking at our sheet here, this presentation slide. And it has this projected undesignated fund balance of 37 million. So that has adjusted, am I correct, to 29 million now? Because in May it was projected, and now it seems that it's the board committed, or now the general purpose committed is 29.9 million.
I don't have that number in front of me. I think you're comparing two separate numbers. though.
Okay.
Let me,
Yeah,
I do.
This is definitely not my wheelhouse.
Yes, yeah. Let me, I
I'm glad
don't
you
want to
agree.
give you an answer and it be wrong. I'll
Okay.
look that up and get you that answer. I just don't have that. Probably should have, sorry, in front
Okay.
of me. But yeah, it is weird, you know, and so.
Yeah. Okay. Well, thank you.
Okay, Mr. Graham? Okay. Mr. Lacy had spoken.
Thank you, Chairman. So, the goal in 2026 is to have all the teachers at a base of 50,000. Do we know what the total cost would be associated with that?
Expensive. I can't give you a penny, but I mean, it would be, Amanda, do you have any? I mean, this would be,
This is very,
while she's finding her sheet, I'm going to tell you what she's probably going to say here in a second, is that you have to look at it individual by individual because each teacher is different place on the scale, different benefits, different returns. There's the cost of, in addition to the cost of just going to the salary, there's also taxes, benefits, different, you know, some employees take different types of benefits, some are on different types of retirement, different things like that. So
so this is very, I don't want.
it's your,
I don't want y'all
To take this home to the bank, but for every certified, for our certified staff, for every $1,000 added to the pay scale, it is approximately 3.2 million. Now that could go up some because that doesn't include, you know, athletic supplements that are a proportion of their salaries and other components of that, but approximately that 3.2 million, and that includes taxes and retirement, and our retirement balance, our required retirement fund, the balance we have to match changes every year. Classified, that's approximately, once again, don't take this to the bank, about 2.5 million, and that also includes retirement and taxes. But the retirement for classified is much more volatile than the certified because it's a separate fund. It's like a separate TCRS fund, and so those have fluctuated pretty significantly before. So that would be based on what our rate currently is. So if that went up, obviously that would go up.
it's about ballpark 3.2 million per thousand for certified.
What's
and
the
2.5
base
million.
salaries now? What's the base salary now?
It's about 40, Mr. Isaac, 45, 45.6 for starting. It's about 4,400.
And so the state, they haven't funded that yet. The state's going to fund that? Okay.
What we got, the first wash of TISA money was to move to 45,000, which we've already done.
Okay.
And then so there's supposed to be more money coming in, but you know, we try not to budget money until we
That's
until
kind
we get
of
it. Mhm.
that's kind of what I was looking for, to
Yeah.
see if some of that money was in the fund balance that we currently had, or is the state going to fund that
So-
in 2025?
So I would say most of this year has been pretty good because the state's funded, or we're primarily funded in Sumner County off property tax. The state is funded almost exclusively through sales tax. So sales tax collection has been really strong until the last month or so. It's dipped some, and of course we're doing the no sales tax on food for a couple months, so that'll put a hit on it. But I mean, so it's not like there's going to be a recession or that we're in the midst of a recession. But there is obviously, you know, interest rates and inflation, things like that, have taken a little bit of toll on sales tax collection. It's just not growing like it was. But I mean, we were also catching huge years, like 7-8% growth. That's not going to ever last forever. So, you know, the state also has a very sizable return or reserve fund. So they're not going to be really hamstrung. The governor and legislature will have the ability to continue to fund more if they choose to go that route.
So it'll be around 15, 16 million, is that correct?
Yeah, if we
To
went
get
to,
the
if we went for
certified
50,000
employees.
on certified,
Sorry, I haven't done that back yet.
I'd say between 12 and 15
Okay.
ballpark.
Like I said, I know you mentioned that Robertson County and another county has already bumped their certified teachers' pay up. Are we having a hard time getting teachers? Are we short teachers?
I mean, everybody's short. Some teachers were very short on special ed. You know, I think that's going to be one of the things we have to look at is the way that we pay special ed teachers. I think that, certain hard to find, like Spanish teachers. So the number is not that great. It's probably like 6 across the county, but it's, or 4 of these, but it's, at that school, you're down a third of your foreign language department. So that's a problem. But part of, there's obviously going to be, we have to stay with our competitors or be ahead. We really need to be in the sweet spot where we're above Wilson, Robertson, close to Metro. But the other problem we have is the sense that education departments and colleges are down 50% in terms of enrollment. So we're going to have to start utilizing more Grow Your Own and going out and just recruiting undergrads. For high school, for secondary, for middle school and high school, it's very easy because you can do job embedded, take the praxis, get a master's degree, you can go ahead and start teaching. We have a large number of increasingly, that's a path. So there's a twofold thing. There's obviously, we got to match or be ahead of our other counties, surrounding counties, but then we've also got to, we're like on the cutting edge of Grow Your Own and different things like that. That's going to be the wave of the future because education departments just don't have the numbers in their programs to match what we're going to lose. Hopefully the legislature will extend. It's been a great deal for retirees where they can retire. We pay 100% of where they are on salary, but they can draw 70% of their pension. We've increasingly had more teachers taking advantage of that, and hopefully the legislature will continue to expand that because that helps kind of soften the blow as we're trying to recruit teachers.
Thank you, Mr. Lacy. Mr. Lancaster?
A couple of things. One, we talked a lot about this. Basically, we got 11 and a half that we could use now, but they're 56. That's the 16%. That's not like in stone that we have. In other words, there is some leeway between what we could use there as well. Granted, that would all be, capital related items that we would need, which we definitely have, not just stadium issues and things like that, but just some general capital, improvements that need to be made in several schools. But I think going back to the governor's plan says we have until, is it 2026 to get to 50, right? Mm-hmm. So that's granted, to be a little bit over, you're looking at 6,000 from where we are now, just to be a little bit over that at 3.2, that's 19.6 that we have to have in just, that's one thing I don't want anybody to get in their head that we would use any fund balance for that because yeah, that's 19.6 every year that we got to find. But I guess and I know I'm jumping around on questions, but that's how my mind works weird like that. But where are we right now on budgeted positions that we have not filled, I guess? Or I know we have 18, and this is more this kind of like, last I talked to Ms. Dam, I think you said there was something like 18 special ed positions.
Yeah, I'm at 16 open special ed positions right now. Doing pretty good on speech language pathologists and occupational therapists. Those therapy related positions are filled, but I have a school psychologist opening and I have 16 special ed teacher openings.
Okay. 16, and that's just, are those actual certified full-time, like this is not assistants?
I'm talking about teachers.
Okay, this is certified teachers. 16 plus, I'm sure we have some assistants so we can't find either, but.
Right, but.
Do we have a listing, I know you guys keep that as well, but do we have a listing of certified positions that we have out there that we don't have?
They're on our website on the careers page.
I'm saying more from from a Amanda standpoint of what we've got budgeted that we
And some of those may be filled tomorrow. We may have 3 people quit tomorrow. And so that number, sorry, Norma, not Norma's people, they're not quitting tomorrow. But custodians, so, you know, that's kind of a rolling, but yeah, we're definitely looking at that. When I'm looking at my variance analysis, I'm definitely looking at, you know, what kind of vacancies you would have. Why is this trending low? Why is this trending high? Definitely looking at those. I call Norma and I'm like, hey, is this really an open position for you? You know, looking to make sure that those are as accurate as possible.
Right. I get what I'm just saying is, like, going back to Mr. King's thing that he talked about earlier, is like how our fund balance changes year over year and the growth of it. But I mean, it's simple stuff like that I think if we were able to kind of point to, you know, to tell people like, look, it wasn't that we necessarily over budgeted. It's the fact that we have, you know, just those
35 positions.
Yeah, just those 18 positions, you know, account for probably, you know, if you figure with salary, benefits, and everything else, you're looking at probably, you know, $1 million plus just on those positions. And so that's, you know, that's one thing. It doesn't take a whole lot of, you know, positions to have. And then you also, when it comes to some of our specialty services, I know, you know, from a healthcare standpoint, what we had to do is you know, some things you have to have, and you have to go out and you know, in the marketplace and get what you can get and contract that out, and you'll end up paying more than you could if you could get it in-house. And I know we've you know, approved some if not some grants, but some expenses for that here in the last. You know, I know
We
we're
also have
contracting
attrition
out.
every year, so I don't necessarily know, obviously, who is going to retire. And, you know, most of the time when you have someone retire, they are a higher paid employee, and then a lot of the time you may fill them with a lower wage employee just because they have less years of experience. But a lot of times their insurance changes. You know, a young teacher may take family coverage, whereas a retiree may not. So there's a lot of different components that kind of can swing with that too. It's not always doesn't always just follow that natural trend either.
But we do know now with the governor's, you know, the where you can retire and stay on for 2 years. How many teachers do we have that are taking, I guess, advantage of that?
I think it's around 18 right now. I could be wrong.
And that's only for 2 years?
One more year.
One more year after this one.
Yeah. We're in our second year of that 3-year program.
Yeah, but we think that they're going to extend that because it's actually, I mean, it's a net benefit for the state because they're only paying out like, I've heard, I don't know, Mr. Wright, you can correct me, but I've heard that they may go ahead and let retirees take 100% of their pension with whatever districts pay them, because like taking 70% actually saves the state. I mean, it's a net benefit for the state for TCRS.
Yeah, and that's the biggest issue I had with it when it first came out, is otherwise it's like you're putting a temporary fix on something.
Yeah.
You're just prolonging.
Yeah, and I think that, you know, for most of the past 30 years, or probably longer than that, it's been almost impossible to have any flexibility to hire. Like I taught in Atlanta for 4 years. Atlanta's always had a teacher shortage. And so with that, the state of Georgia gives them much greater autonomy than we have in Tennessee to get teachers licensed. Like basically a district our size could check off waivers for different things and then agree that we will train in that area. We're starting to get more of that flexibility now, and I think that there will be more of that. But if we can, you know, if we can use some of these retiree options until we get that greater flexibility, it would be beneficial to us.
I appreciate that. Like I say, overall, this is very helpful, at least with, you know, talking points with when people ask us things, because it's, you know, I understand it's a lot more complicated than a number on a sheet of paper, but, you know, we just need to be able to explain that to most folks.
Ms. Lancaster, Mr. Daniels?
Yeah, I just had a quick question. We're talking about the 3.2 million approximately of what it would take to move per thousand. And we're looking at, you know, like our starting salary of like just about 45.6 right now. We talked about making that adjustment to 50,000. That's basically a year one teacher that just graduated with no advanced degrees. And so when we talk about that adjustment, it's not just for that person, because if you raise that level $5,000, $6,000, everybody else behind that also raises $5,000 to $6,000.
Yeah, Metro and Wilson about 10 years ago, Wilson did, I don't know that Metro did this, but they did this kind of gimmicky thing where this was before everybody was at 40,000, and they took first year teachers to 40,000, but then you made 40,000 for 5 years. So you didn't see an increase for 5 years. So it worked well for them until everybody else went above that, and then they were kind of, it's hard to change a pay scale once you put it into place, because you got to change it for everybody. So they've finally gone away from that. But yeah, so you're right. Like if we added 4,400, we're adding that to everybody on the certified scale.
All right, and like I said, I just wanted to try to clarify that.
Mm-hmm.
Thank you.
Thank you, Mr. Daniels. Ms. Hawkins?
Help me understand the 11.5 million balance available. Is that new money every year, or is that something if hypothetically we spend all of that this year, next year is it going to be zero, or is this money that's been building up?
So to Mr. King's point, so as we go throughout the year, we're going to have our revenue come in higher than, we hope we'll have our revenue come in higher than Mr. Lawing, gave us. And hopefully we'll save on some expenditures. And so as if everything else held, if we spent every penny and we got just the right revenue, yes. But we know historically we're going to hopefully expend less than we budgeted, and we're going to hopefully receive more than Mr. Long anticipated. At least that's been the trend for the past couple years. And so that balance would basically replenish with whatever that difference was. Does that make sense?
Well, yes.
Okay.
And so I guess if we didn't touch it, hypothetically, would it be 22,000, 23?
It would be whatever our revenue, like Dr. Langford said, right now sales tax may be down. It's all dependent on where our taxes come in and where what we can save on our expenditures and where, or what we decide not to save. We may decide to allocate that capital for some of these projects. So we may not save some of the money that we have saved in the past.
So it's not just free and available to use. However, we're keeping that set aside for those incidents where we're going to need to reach into that for unexpected expenses. Is that?
I think so. I mean, I think that you try to. That's the reason why you have a fund balance, is
right.
to have that money so when you have an emergency you can dip into.
So it's our emergency fund. Right. It's not really just sitting there as a savings nest egg.
I know, like, Dave Ramsey analogies get misused.
Yeah. I'm hearing Dave Ramsey.
I think this is a classic one where Dave Ramsey, although we won't go to 3 months, which he suggests, because 3 months would be probably 80 million. But I think 2 months is pretty healthy, and I don't necessarily, as Mr. Lancaster mentioned, I don't think we have to be exactly to the penny, because realistically we're not doing any bonds.
I'm talking about the 11.5, not the 56.
Yeah.
Mm-hmm. So the 11.5 is a nest egg?
So the 11.5, just how I've kind of presented this, and I could have, presented, kind of sliced it and diced it different ways. So that 67 million is kind of what I'm saying is available, though 10 of it is technically restricted, but it can be used to cover that 6 million that they say, hey, 2 months of operating. So that 10 million is used to cover that. Mm-hmm. So if you take the total that we have, the 67 million, and then subtract out the 2 months of operating of 56, that gives you kind of available and still maintaining that 2 months of operating expenditures. So that 11 million is above that recommended 2 months of operating.
I asked Ms. Brown what we could comfortably pull out of reserve to work on stadium projects, campus projects, in addition to the capital that we already have allocated, and feel confident that we're not putting ourselves, knowing we've got some other big items coming down the pike, because we may not be able, if we have some of the compensation things we're working on, we're probably not going to have the flexibility to allocate as much into capital as we have in previous years. That's an easy place to kind of pull from. But at the same time, we have over 3 million square feet of school space that constantly, I think what's been eye-opening for me in the last month's heat wave is that, I guess even though I was a principal, I knew that we had a bunch of units at White House High School or White House Middle School. Like, we have thousands of units. It's not just like big units on top of the building that cool everything. It's a whole bunch of different types of units. And, so those are going to constantly we're going to constantly have capital needs because stuff wears out. So we can't dip too much there, but that to me is a better way of using reserve funds when we prioritize something over trying to catch that in salaries, which are recurring.
Ms. Hawkins, Mr. King?
Yeah, so just to kind of thinking about what Mr. Daniels was saying, and I hope you don't mind me sharing this, because I had asked this question back in May, how much does it cost for a $1,000 raise across the board, not just for starting teachers, but for the range increase and all that, and you told me 3.2, which you said tonight. Yeah, you said 3.2 million, but then the annual step would be across the board for a $1,000 raise would be 2.4 million on top of that. So total across the board would be 5.6 million per $1,000 raise.
Yeah, and so why I didn't necessarily pull that apart for this discussion is because in my mind that step is already baked in the cake. So if we did nothing to our salary scale, we're going to have that step, right? So we're going to have that automatic step increase, except, some people will retire and we'll hire more, all of that wash within that. So you're right. You'll have those components are definitely whatever you apply to the salary schedule and that step. But we'll have that step regardless because the law, the way how our compensation, our salary schedule works, they get that every year based on if they work enough days. Now, classified, the step is not required, but for certified, the step is required if they meet, they have to work a certain number of days, and that's HR tracks all of that. But so they'll get that step. The only way they couldn't get that step, which is you would not want to do, you would have to actually reduce the salary schedule. So when they go up, they stay the same, and you wouldn't want to do that. So
and we're not in any way suggesting that we're not going to give classified employees a step. That's going to happen.
Right.
Yeah, and you did give me that information too, and if you don't mind, I'll share that. That was for a $1 an hour raise for classified, it would cost about $3 million recurring, an additional recurring, and then another $1 million for an annual step for classified. And so so that is something I'm concerned about. And I was, when I'm talking about this 31 million, 23 million, and before that it was like 18 million, I'm just like, is there some recurring funds in there that, because it seems like every year we have some recurring because it's getting unspent. And so I'm like, we do not have an army of HVAC guys that we can draw upon. There's only a few guys. And I've got schools in my district that they're like, we can't get guys to work, because we're competing with Texas Roadhouse, and they're paying better, and so what, and so that's something we might want to consider.
Yeah.
Because we're going to need, someone just emailed me the other day, why aren't the bathrooms working at this school, and we got to go down here, and I'm like, well, it's not because we don't have any money, it's because we don't have enough guys. They're backlogged. I'm assuming they've got projects back. I mean, they're probably booked for a year and a half, 2 years. I mean, I don't know what it is, but so that's one thing I would love for us to explore. Is there some recurring in there that we can tap into?
So
go ahead.
Andy Brown, he's actually, I'm going to give Andy a shout out. Andy always gets a shout out. But Andy actually is very involved with his budget. And so he brings to me, and that's just something we can talk about too, that budgeting process. But he as a department head kind of brings to me and he looks at it and he really does analyze his budget and look at based on projects he knows that are coming down the pike next year, based on where he spent this year, and he kind of will reallocate his money. You know, hey, I really think I need more in other contracted services this year because we ran over because we had to do, you know, certain things for HVAC that we couldn't do in house. Next year, though, I think we can reduce my $499 line because whatever reason. And so Andy is the one that looks at his particular budget, which is where we would pay for all that maintenance, except the capital projects, and really kind of manages that. And he honestly, he does a phenomenal job.
And I think you'll see sometimes, like if it's just jetting a toilet, that's a pretty fast response. Like we had a situation at Hendersonville High School a few weeks ago. There are a couple schools where we've got it's like an archaeological dig, like Mr. Gregory, the bathrooms at the Portland Stadium, like they jetted 200 feet today and finally found the problem and got it cleared up. So hopefully Portland will be good. But when it went from being old Hendersonville High School to Ellis Middle School, they paved over some stuff. So they took a fire hydrant and turned it on its side and poured cement over it. And then when Andy's team was working on it, they found a water main that the city of Hendersonville didn't have mapped. And they finally found some guy that worked at Hendersonville for like 40 years that knew how to get it turned. But they were standing in like mid-chest water trying to figure out where to turn it off, and the city of Hendersonville had no idea. And so like that one, and that was with Andy sending our most experienced plumbing crew. So some of it is now HVAC is tough because you can't. Andy's tried contracting. Commercial HVAC are hitting the same market pressures that we are because like if you're an HVAC guy right now and you want to go downtown, you can make $120,000-$130,000. I mean, especially commercial. There's just the market is really tight. And
yeah. I've got one last question, if you don't mind. So you all mentioned the Sumner County trustee, and they do a report. I don't know. It hasn't been every month. I know this last one was in July, but I couldn't find the last one I found was in March. So anyway, I don't.
Yeah, I don't.
Maybe they have it, but I just couldn't find it. But
I don't. So. Yeah, I don't know what their reporting requirements are.
Okay.
I'm sorry.
And as Trevor mentioned earlier, they're a constant. And he may know the answer to that, but he looks like he does. He's got his mic on. I'm gonna yield to Trevor.
Typically, it's in the monthly packet for the county commission, but I don't know in particular.
There's a couple months it wasn't there, so maybe she was on vacation or something. I mean, I don't know.
She does a great job with it.
Yeah. Okay. All right.
Great answer,
So,
Trevor.
in March we had 157 million in the general purposes line, and then in July we had 104 million. So that's moving 53 million from that line. I know it's 2 months is what it is, but
so
how is that?
Our revenue is not, especially our revenue from the state,
Right.
is not. It doesn't come evenly throughout the year. And I apologize. I don't know, Tisa. You know the new Tisa.
Well, I was just talking about cash differences. So if you think about cash in a local government, it's very sensitive to the property tax cycle. So you collect and receipt all your property taxes between October and February. So a county government is going to look really rich in February, but then very poor in September because they've not collected any property taxes in February. Also, sales tax is 2 months in arrears. So you're going to be collecting your December sales tax. You're going to be receiving it in February because it takes 1 month to calculate it and it takes another month to send it out to the local government. So that's another reason you look really rich in February and poor in September when you've got sales tax weekends in August and July and things like that.
And property tax.
Yeah.
Is a huge one. And the state revenue doesn't come in every month.
Okay. Well, I just want to say thank you for doing this because I know it's a lot of work, but I think it's really answered a lot of questions because it's good to have this information. So I just want to say thank you guys for putting this together. Okay.
Yeah, I don't know that there's anything more complicated than school finances and trying to wrap your mind around it. I think, thank y'all very much. Oh, I'm sorry.
I would like to say thank you as well. I know trying to explain numbers can be complicated. Thank you.
Look like it. Yeah, we're all experts now. That's good.
It's the night of the accountants.
Yeah. Next item on the agenda is update regarding district football stadiums. Dr. Lane.
So first off, I wanted to say a huge shout out to all of our principals and schools and coaches and fans. Everybody's been super flexible. I was at Hendersonville, Brentwood Friday night, and everything went really well, looked good. We've got our portable bleachers in Hendersonville and Portland. Beach and White House installation starts at 6 a.m. in the morning. So we're excited about that. We'll have our bathrooms, our bathroom suite at Beach High School. That should all be ready to roll. So we should be kicking off at Shackle Island Friday night for a home game, which is exciting. Homecoming next week. So can't wait to see the new bleachers go up. Stadium facilities team is going to meet tomorrow. So basically we had each school principal, head football coach, track coach, and then athletic director, and then 3 to 5 parents, community members from each school. They've really gotten people that are deeply connected in their communities, and I think it's going to be tomorrow when we meet. What we're going to do, this will be kind of a winnowing down process. Tomorrow when we meet, I'm going to share some goals. Obviously the first and foremost is to move away from cement bleachers where possible, as quickly as possible. And then to look out and not just try to address our current needs, but let's look at the future. For instance, over the next 5 years, probably every school in Sumner County, in addition to football in the fall, will have lacrosse and girls flag football. Those are coming down the pike. Lacrosse is going to be sanctioned very soon, and I think girls flag football, it's already being played in Williamson County and Wilson County. The Titans are investing heavily in it, and I think it's coming too. So we're going to have to think a lot more about multi-use facilities. I think obviously, it's a great time, for instance, like at Beach, it's a great time at Beach to think about things like. I'm not sure I understand. Me either, Siri, me either. But I think to think about things like alternate dressing spaces. We have a huge need right now. Our athletic trainers do a tremendous job. When we started with athletic trainers, obviously the vast majority of their time was spent with football players. And so football also usually has the most space. So most trainer rooms are located in the football facility. Now our trainers are utilized by all the athletes at the school, and most schools have found alternative spaces. But, I was talking to a principal today, like we need more spaces for kids to dress for the sports, and sports and extracurricular participation is taking off. We got to think about places for band to practice, different things like that. So what we're going to start tomorrow is a look for schools to dream big and share what they want with their facilities. I plan on taking all that information and sharing it with our architect to get him to do some mock-ups of what that would look like, and obviously what it would cost, because we'll have to make some tough decisions, and we'll also have to phase in. I think we're really looking at a 3 to 5 year plan. Obviously, things like safe bleachers is going to be really high on the priority list, but I think it's also, for instance, if you look at how track and cross country have taken off in popularity across the county, we've got to have more than a handful of tracks that kids can train and participate on. If a kid's at Portland High School right now, they're probably going to have to access the track either at Hendersonville, Liberty Creek, or go to Springfield. We've got to have some availability and accessibility for kids across the county. So that's a big thing for us to address. Some other things that the schools will bring. I've had a couple conversations with principals because it's interesting. Everybody's kind of saying, are we really serious that we're going to do this? And yes, we're absolutely going to put a plan forward to bring to y'all. There are some things that we'll have to, obviously we'll have to consider the financial arrangements. We're also going to have to consider staging out this work, because certain things, like there will have to be some demo work done. We've got a sealed bid out now for demo that'll probably come to y'all in September if we can get it, but definitely in October. We'll have to look at a tight timeline on demoing at Hendersonville and Beach in order to get bleachers turned around for next year. So I'm going to try to get the architect to put together some, just so everybody can see it, the timelines for how this work goes, because it's not just, there was a time when we could just throw bleachers up, about 1975. Now we've got to be a lot more engaged in the study of how we do it, and engineering, architect, different things like that, which extends it, but it also is going to mean my goal is that we don't ever have another stadium question in our natural born lives of everybody that maybe if there are children here, they would get a stadium question, but it won't be for any of us. Like we're going to solve this problem. I asked one of the things that I wanted to throw out there tonight, the number that we're shooting for, that I'm shooting for, that we plan on asking either September or October, is to move 15 million out of reserve, which will put us a little bit under that 2 month. But I don't think we'll be able to spend $15 million on stadium projects. I think it'll take longer than a year for some of these, but I would like to have it available in case, so that we can get everything done that we can to restore our stadiums and really upgrade our facilities across the county. So
We didn't spend it,
it would roll back in just like it does when we don't spend allocated budget items. So I think that's a fiscally responsible move that keeps us solid as we think about compensation and some other things like that, and other capital projects as we move forward. We will have to replenish a little bit. Like we stripped some of our maintenance lines down to be able to do the temporary bleachers that we approved last week at the special call. So we'll need to replenish some of that money out of reserve for maintenance so that we can continue to maintain our current school classrooms and facilities. But that's kind of an update on the stadiums. If you have any questions, I'd be happy to answer those.
Well, all right. Thank you, Dr. Lackford. Next item on the agenda is classes put on. Discussion regarding proposed policy 3.600 bleacher and stadium inspection prior to first reading. Any questions or concerns with that? Okay, Mr. Lackford, Lancaster, I'll get it out in a minute.
You're good. So this is where we are now. There is no state guidance or anything like. I mean, I've looked that up. I know there's state guidance, like there's fire guidance on.
There's fire marshal guidance on retractable bleachers.
Yeah, like the
they have to be checked every year. Mm-hmm.
But nothing. That's one question that we're kind of writing this from new. But this is all based on the architecture recommendation.
I asked the structural engineer what she would suggest that we do for existing cement structures, and then I looked through the structural engineering report and some of the suggestions she made there. You know, the biggest threat, if you look at that engineering report, the biggest threat in Tennessee is the freeze cycle. So looking at these stadiums, you know, the problem is like what we get with these is you look at them in August and you're very limited in what you can do. Now, I mean, honestly, like the work, if we had found some of this work in the spring, it would have been beyond the scope of what we're hitting the end of life of a lot of our cement structures. So I will also add that if you've noticed, other districts are starting to check theirs as well.
There's.
Yeah. So I think everybody had the same kind of feeling that we did. Obviously, we missed on this, and we're going to own it, and we're going to move forward. But I want us to have the most inspected, safest bleachers that we can. And I think what she suggested is having a structural engineer or architect look every other year, and then have maintenance look like in the spring and then before each season, but in the spring and in the before football starts to check all the bleachers. And then if they identify a problem, then we'll bring in the structural engineer to look at it. I'll be honest, I think the cement part is a short term, because I'd like for us to get out of cement structures as quickly as possible.
Thank you.
Mm-hmm.
Mr. Lancaster, Ms. Andrews?
I would just like to make the recommendation that within the language of this policy, where anytime it says professional engineer, that we change that to say professional structural engineer, just so that we're specific about what type of engineer is our expectation as far as who is looking at each of these. I mean, obviously, I think that would be the intention of it, but just to be specific to say professional structural engineer, there's about, I don't know, 3 or 4 different places.
I don't know if that's an actual, I don't know if professional structural engineer is I think we could just say structural engineer.
Okay, that's fine. Yeah, it's just however we.
I don't think that classification exists.
Okay, so just it could be by a structural engineer or a registered architect. I just think I don't know that a mechanical engineer or a civil engineer, not that they're not great at what they do, but there are specialties. So if we can change, I think there's, 4 or 5 places within that, if we can just upgrade that.
Ms. Andrews, Ms. Hawkins?
In the third paragraph where it says all other masonry building structures will be inspected prior to the beginning of each season, is that 4 times a year?
3 times. So,
Okay.
like, you wouldn't have to do it, like, you would check softball and baseball before softball and baseball season.
So for each athletic season?
Well, you would only have to do it before they start playing. So you
Okay.
need to do it once before baseball and softball season. Soccer, so soccer you'd need to do twice because girls play in the fall, boys play in the spring.
Right.
I think it makes sense to check bleachers before we have fans sitting in them.
I'm just wondering if that needs to be
Yeah, we
more
can
clear
tighten that
as to
language up.
whether it's like fall, winter, spring, summer seasons, or are we talking athletic seasons?
Yeah. Yeah, I think we can absolutely do that.
Mr. Daniels.
Yeah, I had a question along a similar line where it says all other masonry building structures, dugouts, bathrooms, concession stands, etc. There's a number of structures that are not on our campuses. For example, Gallatin High School's baseball field. They have bleachers now. They're not, I think they're not temporary, but they're, not huge structures like we have at our stadiums. But how would we work to make sure those are inspected? Because technically, I don't think they're school property, but our students use them. So
Right.
I assume we'd work with the city governments on
We'd have to work
inspecting
with the
those.
city parks. Interestingly, our arrangement with the city of Hendersonville is the oldest agreement in the state of Tennessee between a school system and a city. Because, we wouldn't necessarily have control, like we couldn't force them to update or anything. But I feel like after what happened here, everybody's going to be looking at bleachers a lot more. But yeah, I think we would just have to work with the cities on that.
Thank you.
Thank you, Mr. Daniels. Mr. Wise?
Thank you, Mr. Chairman. A couple of things. If we change that language in the second sentence, first paragraph, to structural engineer, is a structural engineer up to date on safety issues? For example, and I'm going to pull this into, I think, the third paragraph. For example, White House High School basketball gym has a rail in the balcony with a chain link fence. I'm always afraid my 9-year-old grandson's going to jump off of there onto the basketball team. So far, I've kept him from doing that. But would the structural engineer would he or she also be safety educated?
I think that's a good question. I think that would probably be something that our maintenance team would look at more, because a structural engineer is going to look to see if it's going to carry the weight and distribute it properly.
Right.
We're looking for failures that prevent it from doing that.
I would like to see something in this policy concerning safety measures and I don't see where we're talking about stadiums, but I think we need to include anything that allows for public seating, basketball, even in the auditoriums. I know White House Middle School had a chorus event, I don't know, latter part of last school year, and the auditorium was packed. And I happened to think, what if this seat I'm sitting in is not screwed down good? And so I'm concerned about the safety issue in all of our public seating arenas, I'll call it.
Yeah, I think that's great, because we fixed most of the auditorium seating. Like I can remember prior to the renovations at Beach and White House, we had, if you came to a performance, we had 10, 15 seats that were broken and some other trick ones, but you had to be careful the way you sat down in it. But I agree that I think that we need to look at our gymnasiums and auditoriums as well, anywhere we have the public sitting.
And you mentioned that. I was going to bring that up also. I was wondering if we have someone in maintenance already who has some knowledge on structural, on safety and that sort of thing, and have maybe biannual inspection by a structural engineer or
Yeah.
whatever that maintenance person
Yeah.
suggests, I'd like for you
And
to
that-
go look at this.
And that was my suggestion of an annual kind of safety facilities look, and then every other year have the structural engineer come in. But then they would alert the structural engineer if they saw something that was troubling.
Thank you, Mr. Wise. Ms. Andrews?
Yeah, just wondering, as far as what Mr. Wise was asking, I think this year, within the budget, we added a part-time position with some safety, aspects. And I know a lot of that has to do with, specific thinking of like safety, intrusion, visitors to the school and so forth. But would this be something that would also maybe fall under that purview of that position? I mean, obviously,
I think that's been more focused. That's more of like school safety in terms of
Like
Ms.
after-
Brown's department
right.
in terms of security. I think that our maintenance team, for instance, like we have a team that works with the fire marshal.
Okay.
Because as Mr. Lancaster pointed out earlier, retractable bleachers are already inspected every year. Like Andy already has somebody that inspects those
Okay.
because it's part of the fire marshal walkthrough. The question then is when you have, like, for instance, at Ellis Middle School, older bleachers that don't push in and push out anymore, there's no requirement, just like exterior spaces, there's no requirement to inspect those. So we want to get somebody under there to look and inspect, to make sure that they're in good shape. Now, the advantage of an inside space versus an exterior space is it's not getting water and it's not getting the freeze cycle. But I just think, like, to me, I never want another scenario where we're looking at something like we had at beach. Like,
Right.
we want to be the most proactive to make sure that everybody, like Mr. Wise, like anywhere somebody's sitting, we want it to be safe.
So I know we have, Ms. Brown does with her team as well, go through the school, does safety audits and so forth. So,
Yeah.
I agree with Mr. Wise that maybe that's something, that we're also looking at is going, okay, hey, wait, while we're here, or let's work,
And-
let's think through worst case type scenarios of,
And-
addressing some of those, being proactive versus reactive.
And I think that with the retractable bleachers, the good thing is, and with aluminum and steel, is that they have manufacturer guidelines. It's a checklist, so it'll be fairly straightforward for our teams to go through and check to make sure that they're meeting those guidelines. And I think
agree.
there would also be safety and maintenance training that would go with those products.
Right, I think, for everything, hindsight's 20/20. But I think we're all in agreement that, from that day forth, I won't even say this day forth, that day forth, that, we're gonna have a different mindset and be forward thinking and looking at those things and trying to, anticipate them, ahead
Sure.
of time and try to go ahead and address them. So I do appreciate that. I appreciate the work that our maintenance, department has done and, just your guidance on that to spearhead that and just say, that this is a priority, student safety within our buildings, but then also, guests that come to our campuses and so forth, that their safety is also a priority.
Yeah, thank you.
Thank you, Ms. Andrews. Anyone else? All right, seeing none. Moving next on the agenda is discussion regarding a revision to policy 5.301, leaves of absence prior to second reading.
I think this is a quick update, Mr. Brewer, because we have a conference call. I think many of you received the invitation to from TSBA about this policy. State still has not appointed anybody to the position to give guidance to districts. So we're going to try to accumulate. We'll probably, I hate to come to a study session without information to share with you about the questions we had last month, but really there aren't many answers, and we're hoping that we can get some of those answered tomorrow, so when we come to the voting session, we'll be able to spell out some of those specifics.
When is that?
Mr. Lancaster.
I haven't seen that. Is that TSBA? You said they were having a call.
It's like a lunch, like they've got their TSP legal team.
Okay.
I can send you the.
Yeah, if you-
I'll forward y'all the sign up for it.
might have it.
Yeah. Yeah. Yeah, it's like a lunch and learn or something. It's at noon tomorrow.
I just saw lunch.
Else on that one, move on to the next item on the agenda is discussion regarding a revision to policy 4.302, field trips and excursions prior to second reading.
Okay.
Comment on that one.
Mr. Lacy, I've got an answer to your question that you emailed me about. Currently, our insurance does not cover, the kids would be covered by the insurance of the person occupying or operating the vehicle. It's definitely a problem for our minor sports and extracurriculars and something for us to, but there's not really a solution for it. We're not set up to do that. And it's something that we could definitely look at and talk to insurance about, but I'm not sure that any school district provides insurance on operators of vehicles.
Nothing else on that one? Moving on? Oh, I'm sorry.
Just, so do we need to make sure that the drivers of those cars are insured?
Yeah, they actually they do that work. Mr. Wright, you wanna-
Well, that's part of the new
Okay,
revisions.
so they have to show that they are insured.
Driver's license, valid driver's license, and insured.
And I think, it's, we highly discourage, we catch some of this from parents, why can't my child just drive? If you've noticed, we finally had a success, I don't want to jinx it for this week, but we had a successful week where no one was injured on a Friday drive-in with kids. But, 16, 17-year-olds driving is not, we want to discourage that as much as possible, especially, some of our teams are traveling to Cheatham County or Macon County, and they're driving a good distance. Like, we strongly discourage kids from driving to those. So, hopefully, we want licensed drivers with current insurance.
Mr. Lacy.
Thank you, Mr. Chairman. So should we recommend like a minimum coverage? That way the staff person would be protected. I know I've had jobs in the past that I drove and carried customers around. They required me to have a minimum amount of coverage. Would that be a good idea?
Yeah, I think we could probably just put that as a recommendation for parents to make sure that, because obviously, with the cost of vehicles today, just take out injury, the cost of an average vehicle, if you get that cheapest insurance policy, you're going to be in trouble if you run over anybody. So we could probably put something on there about just to alert people to be concerned about it. Or to be aware of it,
Mr. Lacy? Anyone else? All right, now moving on. Discussion interaction regarding the draft policy 3.205, door locks prior to second reading. Anything on that? King.
Yeah, I just wanted to make sure that on the language there at the bottom, exterior classroom doors, and it talks about getting, unless there's authorization from the principal, and I'm just thinking of some, agriculture classes that have to go outside the building and things like that. I guess that would fall under the principal's authority. Am I correct? Okay.
Yeah, we just want to be able to, as a principal, you always want to know when someone's outside the building, just so you know where to look for them if they're outside.
Okay.
Yeah, I just had a question. I know we're talking about classroom doors here, but the outside areas, the playgrounds and things like that, are all of our playgrounds fenced in? Okay. Do we need to look at that? And the other question is, I know we have some that have fences, but I don't know if they have gates that close during the day, and so they're easily accessible. I want to say Howard has the road that circles behind, but I don't think there's a gate there that closes. I know Union has a gate, but I don't think they close it in the entranceway during the day. Is that something that we want to look at from a policy standpoint?
Well, I don't know about a policy standpoint, but those are things that we evaluated as a part of our security audits, and some of them are addressed in the safety projects that we are bringing before you. In fact, there's a bid opening on fencing tomorrow. We've done some preliminary measurements. Putting an actual enclosed perimeter fence around a playground is not necessarily the highest priority. It's more about creating a boundary or a barrier that deters folks, that says this is school property and this is where you're allowed to be if you're a part of the school, and that's where you should be if you're not a part of the school. And so we're not necessarily trying to enclose them, because we're putting up a 4-foot fence. It's not really a security measure, but it's more of a deterrent and a visual boundary that says this is the school property, and we can put signage up that determines what hours the public may or may not access that space, because we have a lot of schools and neighborhoods where the public uses the space, and if they are responsible and don't vandalize the space, we don't mind that. So we can put up signage that explains that to them, but then also some of these campuses that have roadways or traffic, might be the bus lane, but people use that as a cut through. Yes, those are some areas that we have looked at and we have identified that may need gates.
Okay. And I know some schools have natural barriers too. I mean, some
Yes.
of our campuses are a little bit more enclosed than other places too, but I'm just curious. Thank you.
James? Anyone else? All right, seeing none, we are adjourned.
Sure.